everyone, and welcome to another episode of the Pineapple Podcast. Today, I have a very special guest, Ryan O'Hearn from the BC market. Ryan is an avid investor, and he's also a real estate agent for this market. Ryan, welcome. Please introduce yourselves to our members.
Thank you, Mitch. Hi, everybody listening. My name is Ryan. As Mitch said, I am a real estate broker out here based in Vancouver, British Columbia. I am also doing my own investments as well. So I like to say kind of a hybrid role in some senses. And met Mitch through my KeySpire coaching last year, and he's been an amazing coach too in the past. So I'm really happy to be on this podcast right now.
Wonderful, Ryan. Well, thank you so much for coming on board. You know, a lot of people want to understand the BC market. As you know, real estate has really been exploding in the last couple of years. And to be real, we're seeing a slowdown in the market because, as you know, everybody's talking about the rising interest rates. BC has always traditionally been a premium market versus the rest of Canada. Traditionally, now I feel like Canada is kind of getting caught up. But tell us about the BC market. What are some of the pockets or the areas that you find you're seeing some pretty good price points? People are still looking to get into the market and things that's happening in BC.
Definitely. Yeah, I mean, BC is such a large space as well. And similar to Ontario, there's such a big demand for immigration. And, you know, people want to move here because it's nice, right? And
Yes.
I know that sounds very simple to say, but it's just you go outside, you got the mountains, you have the ocean, you got the leisure recreational activities. It's quite a unique space to live in. And it's just to think that most cities are, you know, a 20-minute drive from the beach or a hike or skiing. It does offer quite a unique kind of proposition, not only for investment, but also for people to move here as well. So I think it's been very popular with many, not only people within Canada, but also within, you know, internationally. BC last year has been over 1,000 people did move to BC last year. So out of the 400,000 immigrants that, you know, the federal government is trying to bring in, 100,000 moved to British Columbia. Wow. And so it's a very big number. And that was, I think the largest numbers in like 50 years that's come to BC was in 2021. And I think second Ontario. I think Ontario might have edged out BC. But if you look at it on a percent basis, I think BC does, punch above its weight in terms of the intake of immigrants. Yeah, I mean, it's a great place to invest in terms of, if I speak to the Vancouver market to start off, maybe we can start there. But personally, I've invested in Prince George up north. Also, we've partnered with in Nanaimo on a couple of properties there. And then in Whistler. So I have a general take on a few markets, but just naturally working in the Vancouver market, I do understand this one quite well because I'm looking at it on a day-to-day basis. Not that I don't look at my investment areas also, but I do look at those too. But I guess starting off with Vancouver, Vancouver is a great place. I mean, in terms of what percent of Vancouverites are millionaires, but it's a big percent. And a large part has been due to capital appreciation. It's been a big performer, and I think a lot of people have made their wealth in real estate, especially in Vancouver. And what this has created is just a bit of we call it a wave equity effect, where, you know, there's equity built in Vancouver, and this kind of spills out into other areas of BC. And that's kind of what you're finding. I would imagine Toronto might be a similar effect as well, but Vancouver is very interesting in the sense that it is a very predictable pattern of movement where people are moving. Well, you look at Vancouver on the map, it's mountains to the north, it's oceans to the west, it's border to the south. So there's not really any room for it to move. The only direction Vancouver can move is eastward. So what you find is pricing generally to the west is a bit more, a bit more of a premium. But as you move out to the valley, pricing moves down. I mean, not in a perfect linear line, but pretty close. So it's less, I would say, pocketed than some other cities. Like American cities can be a bit more kind of with good pockets, bad pockets. We do have a bit of that, but it's not as obvious. It's a bit more of a, you know, just how close to Vancouver are you, and the pricing does reflect accordingly, generally speaking. That's been and from there, people have moved to Victoria, Nanaimo. These are all benefits from, you know, the appreciation of Vancouver has kind of people have moved outwards to the east, but also to Vancouver Island and even up towards Kelowna. I'd say Prince George to some effect as well. So people are spilling out, and this has created a bit of equity going outwards.
Nice. That's quite interesting the way you've positioned that, because I think we're seeing the same sort of pattern in Ontario. GTA, you've got to be the high roller, the high player generally to get into that market, simply because the price points have been pushed up really high. But there's a tremendous amount of investments going on the outskirts of the GTA market. And it's actually infilling a lot of smaller towns that typically did not see any sort of big boom in prices. And even though we're seeing a bit of softness, we're still seeing lots of activities on the periphery, in the outskirts of the GTA markets because of that, right?
Yes.
As an investor, why would I want to come into BC? I mean, you've highlighted one really cool thing, which is you're on the coast, you got ocean water and ocean views, right? So as you said, you've been investing in different markets. You're looking at your particular investments outside in the outskirts, yet you service other investors within Vancouver. So what are some of the strategies that you're seeing as you come out on the outside? Is it more focused on land development, conversions, multifamily? Where's the investment sort of streamline or geared towards?
Yeah, no, there's a ton of opportunity out here. And as someone that is, I would say, starting out a bit in the beginning of my real estate investing career, I was a bit forced to think of different options because it is tough to get into a regular place for investment purposes in Vancouver. It is a barrier to entry to get into Vancouver is higher than most places in the world. So what, in terms of opportunities to starting out, I started out with partnering with a joint venture partner out in the Valley. We would be renovating condominiums out there and buying them for 180, selling them for 250 to 300. And this was a unique opportunity because you can do that there. Where Vancouver, the land values are so high. If I renovate the house that's only representing maybe 20% of the value of the entire property, it's not really affecting much. Where out in the Valley, you get a condo, the actual improvement is the majority of the property value. So if I do, improve the improvement, the value is going to go up considerably more. So that was where That was where I started 2 years ago, was doing some flips out in the Valley there, just renovating and then reselling there. In terms of personal investment in Vancouver, you have condominiums are quite a great way to get into the market here. The rents are very strong, and the rental appreciation has been very, very high in the last 2 years. And that's another reason why not only the value of the property is going up, but the rental rates have been keeping up. And if anything, right now the rental rates are jumping ahead, even beyond the values right now of Vancouver, because I'm not sure about Toronto, but did you experience a bit of a slowdown with the downtown market and people moving outwards during the pandemic?
Right. So let's unpack that a little bit, because the reality is the market is changing. Everything across the country actually has slowed down. And again, that's the government's position. They're pushing interest rates up because they want to curb inflation, which means they expect the market to slow down. Our hope is that we don't slow down to the point where we get pushed into a big recession, right? But you're right. What is happening is pressure now is moving from people wanting to buy their first home into people needing a place to rent. Because what happens when interest rate goes up? You have a whole sector of first-time home buyers or people that were saving to get into the market. They can't. The interest rates are too high. The stress test is another layer on top of that. So they've been blocked out of the market. Now they need a place to live. So guess what? They're knocking on the landlord's doors saying, hey, we need a place to live. We're willing to pay more. You just need a place to live. It's like food, right? Food and shelter. So definitely we're seeing it in Ontario specifically. You're seeing it in the BC market, and across the country, we're seeing the same thing. Pressure on rental is there, and it's not going to go away soon, because while the market was hot on fire and moving like a mile a minute, we still had a housing shortage.
Yes.
Hasn't gone away. The immigration plan is still in play, so people are coming into the country. They all
Yeah.
need a place to live, Ryan. So,
Yeah.
it's a good opportunity as an investor to still focus on getting value so that you can rent out. Obviously, the metrics are different. The way you
Definitely.
approach the business or the offer is different, and that's where your expertise would come in, for sure. But
Yeah.
it's interesting that you've raised that point, and I think you're absolutely right. Where
Hmm.
pressure on rent is definitely there, and rents are going to go up. So as a real estate agent as well, you're kind of having to shift to represent your clientele on the rental side as well, correct?
Yeah, so out here in BC, I do help generally, but I actually can't. It's a different license. I don't know about Ontario. I can't actually really help with the rental, but I can kind of direct to the website.
Ah,
But I am watching and I'm connecting them with rental managers as well.
mm,
So yeah, maybe I should get my rental license though, because that would be very helpful. But just anecdotally speaking here,
yeah,
one of my clients has a basement suite, a 3 bedroom. Last year was rented for 2,700 a month.
wow,
And this year, the students left. So the new school year is coming in. And I think school is and enrollment is very high right now. A lot of students that have put off enrolling during the pandemic are coming now. They're like,
yes,
okay, it's time to go back to school. So it was posted for 3,300. And she got over 20, 30 applications, and now it's rented for 3,600. So this is almost, it's it's 1,000 square foot basement suite, 3 bedrooms. So that's almost $3 per square foot for a basement suite near
right.
UBC, and it just seeing that, and 1 bedrooms have gone up about 80% in terms of rental appreciation since last year. So Vancouver, it is a bit of a premium, but I think there are jobs out here to support it. People are making working primarily tech sector. There's I guess the healthcare sector. There's universities. We don't have as many head offices as Toronto per se, but there are a fair amount of there are some offices out here now that are Microsoft, Amazon is
Right.
opening another office. Lululemon's a big employer out here. There's and in the film industry too. So we're seeing a lot of movement with these rental properties in good locations and people that are willing to pay a premium to be in a good location. I would say Vancouver, for many people moving here, is a great location with the lifestyle options we were mentioning before.
100%.
Have
I
you?
totally agree on that. I think from a Vancouver perspective, if you have money you want to park, it's like a Toronto. It's safe in the sense that it's a premium location, triple
Hmm.
A. Values don't generally dissipate no matter what the market is. There are
Hmm.
certain pockets that's going to hold value, right? Like we say,
Hmm.
unless the
Yeah.
market is broken, that's a different story. But what we're seeing right
Hmm.
now is basically a cooling down. And funny enough,
Yeah.
that now is actually one of the best buying times as an investor because you can make an
Yeah.
offer with conditions. Like 3 months ago, you weren't doing that, right? It was like, yeah, you want 1 million. Could I give you 1 million too, please?
Yeah.
So now you can really analyze your properties. You can see if there is, in fact, across the four ways to win, is
Hmm.
there an ROI for you, right? So now, as
Yeah.
an investor, it's your time to prepare. And this is where you would build your wealth because prices are coming down, so value is being created. Rents are going up, so
Hmm.
you're going to be able to manage the higher mortgage rates as well as an investor.
Hmm.
So
Definitely.
the markets that you're specializing in, if I were to come to you and
Yeah.
say, Brian, you know what? I've got some money. I have the ability to get approval on mortgages. I want to get into some unique investments in BC where I can make a
Yeah.
profit or where I can really put some dollars down so that over time it grows. What would you recommend to me?
Yeah, a few options, Mitch.
Nice.
um, so I'd say what I've been doing right now is I think you look at cash flow and you look at equity return. I think you kind of need a bit of both in the end of the day, right?
Agree.
So what I like about Vancouver, it's a great way to build equity. It's a great way to build cash to plug into maybe another property in Vancouver in the Valley, or even going out to other parts of BC.
Yeah.
So what I recommend, generally speaking, and what I've been doing is Vancouver is a great place to, for equity building, to park your money in, rent it out, find a great tenant, and then build equity for that 3 to 5 year period. Once you can build that equity there, especially if you move into Vancouver, this is a capital gains potentially. If you're living in the property, right? Like this is a great way to build equity that's tax-free money. And what you can do with that is after taking out an home equity line of credit, or perhaps you take some of the cash out from, I don't know, liquidating, but you can also park it into other markets as well. Some cash flowing markets that we've participated in is up north in Prince George. Prince George has some great rental return. It is about 100,000 people up there. So it's not a tiny town by any means, but it is growing at about 1 to 2% a year. So it's a stable, slower growth, but I wouldn't say it's exploding, but it's healthy and it's growing. It's got a university hospital, everything you need. And that's what I like to look at is, does it have a university? Does it have a hospital? Does it have like even an airport? Like these things means that the government's putting money into the city, in which Prince George, BC has designated as the capital of northern BC. And they've basically overbuilt the hospital there. They're attracting a lot of people to not only move there, but there's a lot of great renters and a lot of great paying jobs there. So this is an example of a market of Prince George, Nanaimo as well. Like there's not really, it's hard to find a bad market in BC. I think you pick one with the big three, but I think you'll do okay.
Let's talk a little bit about that, the Prince George market.
Yeah.
You've made some interesting points for sure. So you're saying that it's actually the considered the capital of northern BC. I mean, to me, that's huge. And that's coming from the government, you say?
Yeah. They've designated that in terms of medical as well. Like they've overbuilt the hospital to accommodate all the small towns. Instead of building one hospital, they built it there. So they're putting money behind and putting international airport too. So it is, yes, they are designated and saying, hey, if you want to do business in North BC, it's Prince George is the place to go.
So as an investor, I mean, my eyes perked up there, because now I'm hearing, if of all the small towns, they're going to concentrate this town into the big facilities. You said they've overbuilt the hospital. What in fact they're doing is they're planning for the future population explosion or population growth. So they're saying, I'm building it today. It's 100,000 people. We probably expect that population to double over the next, 4 or 5 years, right? So this is timing, right? It's really, we always say it's about time in the market versus timing the market. But, when you get into a position where the growth plans are now in place, it's similar to a gentrifying market. So in this case, it's a growth market. So you have the government pushing resources into that market. Well, if I'm an early investor, I come into that market, I'm going to buy at today's prices. But then 3 or 4 years' time, when that population starts to grow and you have the doctors, the nurses, the staffing people that needs to come in, that's going to work on that hospital full time. If they have government offices, that's another thing that's going to increase. They're all going to need a place to live, place to call home. And so to me, you've just sort of opened my eyes to, here's a very interesting market that we can go shopping in at today's prices, because 5-10 years time, and we all know real estate, it's about the long-term play. That market, that property value has the potential to double, triple, quadruple, or even more based on how the demand comes into play, right? So to me, it's quite interesting that you've put these points on the table. So now as an investor, I'm like, okay, maybe I need to talk to Ryan a little bit more and understand, like, what are they selling there? So typically what's available in the market? Are we looking at single family homes, duplexes? Is there opportunities to do conversions? What are you seeing in the market?
Yeah, so it's primarily a lot of older stock actually up north in Prince George.
Nice.
It's homes that were built in the 60s, 70s, 80s. And now we're starting to see a bit more of newer rental stock coming to the market. So traditionally it was older, duplexes. That's what we've been looking at, is mostly
Yeah,
duplexes.
right.
And these are potentially, you can add suites to the downstairs if you wish, or rent it out per side with a basement with an extra bedroom.
Yeah.
And these are 1960s, 70s builds, and you're looking at duplexes. I mean, when we're looking few months ago in the 400 to 450 range, you can find duplexes, and you could
Wow.
rent these out for 1,800 per side rental rate, so 3,600. And so it's not like a quite 1% rule, but it's pretty good. You are though having to look, because the rents have gone up, you are having to work with tenants, if they have been there and have a lower rental rate, you are maybe having to wait for them to move out before you can put to market rent, which is a bit of something like Ontario you have to kind of work
Yep.
with, and make sure they're comfortable as well. And
Yeah.
but it's a great rental market, and we've got some solid cash flow there. And I'm using equity I've built in Vancouver, and then kind of parking it out there, and then also build. And you ask for opportunities, I would still keep myself in the Vancouver market. I'm in a pre-sale construction that's completing next year, and I think pre-sale in Vancouver has offered a great way to build equity. Again, taking equity from here, and then you
Yes.
can deploy it into a cash flowing market, and then you kind of recycle, keep the process going. And I think in terms of Prince George, yes, you've got a lot of duplexes. You can rent those out for great rents. You can renovate them, and there's a need there because a lot of people moving to Prince George, and a lot of these other smaller, like small town, 100,000 people, but they don't really necessarily want to buy there because they're only there for 3-4 years. They're working in the lumber industry. They're working for healthcare. They're studying. They're students. There's a lot of people are coming for that 3 to 4 year window that aren't really looking to buy, but they're wanting to rent, and that's why the rental pressure is so high. And but you're now starting to see newer rental buildings that are coming in. I was doing research the other day, is about probably 200 rental units coming in. So we're kind of evaluating that. How is that going to affect us, or is that in terms of the competition point of view? So as an
Yeah.
investor, I am kind of monitoring that and seeing how our rents compare, making sure we're priced well. But end of the day, we got to, it's every market's different. You got to differentiate your rental. Like, what
Yes.
are the attributes we have? Is there a backyard versus a condo? So it's kind of looking at these different aspects that not everyone necessarily wants to be in a condo. So there's
Correct.
room, I think, for everyone. And I think that's just part of the evaluation as an investor, seeing what competition's coming in. But you can tell, obviously, if big money's building rental buildings out there, there's probably demand for it, and we're doing something right.
Exactly, because it means that there's planning in place that's behind the scenes. We typically may not be privy because the planning department, when they plan to expand certain towns, they go to specific
Mm-hmm.
size builders or developers, right? Because they want to make sure that there's certain things they want to get in place initially, because they
Yeah.
know the market would follow. They know builders would come, developers would come, investors would come over time, but there needs to be a sort
Mm-hmm.
of a framework of infrastructure that can support
Yeah.
the development, and we're
Yeah.
seeing it here as well, like smaller towns in Ontario is exploding, population is growing.
Mm-hmm.
Even
Mm-hmm.
the government, the local government, provincial government has earmarked a lot of money to go towards Northern Ontario for mining,
Mm-hmm.
and
Yeah.
that sort of development. And as a result, you're
Mm-hmm.
seeing people in the same boat. I think I was talking to another lady in Alberta. They're finding like sort of northern towns. There's suddenly a
Mm-hmm.
big demand for rental because companies are bringing in their staff that needs to do all this pre-work. They need a place to
Mm-hmm.
stay, right? So
Yeah.
the market is
Yeah.
definitely positioned well. I want to pick your brain a little bit on Nanaimo as well, because you said that's another
Yeah.
interesting market you're finding there.
Yeah, definitely. Nanaimo is interesting. I think Nanaimo is a little bit more tied with Vancouver, and
Mhm.
in the sense that people are retiring there. It's a bit of I would say a mixed demographic, but a bit of an older demographic there. People that, they're retiring in Nanaimo. There's students there as well. There is also a more of a smaller but growing tech sector in Nanaimo as well. And you got the kind of the you know the right kind of the financial services out there too. There's the hospital in Nanaimo, so it is growing, but I'd say Nanaimo is a bit more of a spillover from Vancouver versus its own whole ecosystem, and Victoria as well. People moving from Victoria to Nanaimo. And I was chatting with some investors as well that have great success with the university there is doing student housing. And again, what we're mentioning earlier, student housing, I think in a lot of these towns will do well just because if there's a recession or not, people are, and especially if there is a recession, I know Scott and Michael always talk about student enrollment going up because people have nothing to do. They go, oh, go back to school. So I think there will be a interesting, if, you know, and this is all about looking at what is, you know, the climate of the economy, what could be happening and positioning yourself accordingly. And yeah, Nanaimo is I'd say it's a smaller town, but you do have Victoria and do have Vancouver, which are both kind of, again, people are moving out to Nanaimo for affordability, and you could commute, you know, they could commute, they could, and again, it does have its own charm to it as well. And it is growing, it is emerging as well. And you're in Vancouver Island near the beach. So that, again, not to go back to the nice card, but it is beautiful out there too.
Absolutely, absolutely, right? Because you have the whole coastal region, you know, ample sort of a healthy fishing market industry there as well. So people can go out, have fun, really enjoy, you know, we talk about lifestyle freedom there. I think BC is a market where you can invest. And if you love water and if you love ocean, that's the place to be, because now you can balance your lifestyle with your lifestyle freedom goals, you know?
Yeah, definitely.
So
and yeah, rents in Nanaimo have rents going up. Rents are going up there too, as well. It's in BC too. It's just about, again, I'm still learning how to work this, but we, you know, with tenants, like, you know, there's ways to kind of help move around the building and creative ways to up the value of the building. We're still kind of exploring that too. Still a bit new territory, but it is about working with the tenants out here. Same with Ontario. You can't really just, you know, give notice to everyone at one time. It's a bit more of a work together approach in both markets.
Absolutely. Yeah. I mean, there are strategies in play, especially if you get the right agents, right property managers, or seasoned investors. There are ways to navigate. It's more on the negotiation side than a policy, let's say. So everything is open and negotiable, and with the right tactics, you can make some improvements for sure, you know. And that's, you know, that's one of the other things that you mentioned too, that the houses are from the 60s, 70s. So to me, it's a lot of opportunity to get into the house, expand the footprint, make it modern, and then drive the rent values up, because now you have a modern home, probably a bigger lot, because back then they actually gave you more land space. Yeah. So as an investor coming in, you could literally own the town, so to speak, right?
Yeah, definitely. There's a lot more opportunity to again use the key spire concepts you learn out in these submarkets, but not to ignore Vancouver as well. And I, again, like going back to Vancouver, it is the way to build the equity, I like to say, and then again moving it out from there. And with Vancouver, there's a lot of density coming into the transit. And I actually wanted to talk about this specifically because it's something I'm looking at myself, is transit oriented corridors. So the city of Vancouver has just approved a massive plan for the Broadway corridor. They're going to be putting in a ton of office space, and they're expanding the SkyTrain line out towards UBC from downtown. And this has offered a lot of, this I think will be a big deal, because it's going to be going through the Vancouver, the hospital area, Vancouver General Hospital, out towards UBC. And they're going to be plugging a bunch of there's a big healthcare industry that they're going to be growing around the hospital. And not only is this going to, you know, not only will rents, you know, be probably going up with all these jobs coming here, but also with walkability to the future SkyTrain station and potential density in the future. And we're seeing a lot of sometimes walk-up buildings, 3 stories, you know, 4-story buildings that are being bought up by developers, and they're, for the density, they are, you know, giving a premium to a lot of these condo owners to build higher density, because it is close to the SkyTrain. It does make sense, and you are getting a big lift in some of these opportunities, because these buildings are sitting on a fair amount of land. So it is something I'm looking at, because right now the rents for one bedroom in Vancouver have gone up about 18% since last year. Mind you, it
Yeah,
did go down for during pandemic about 10%, and then now it's
yeah,
up 18. So I guess it's net kind of up about 8 from
right.
2 years ago. But
Yeah.
it's like you're looking at them, and they I wouldn't say they're cash flowing machines, but they are paying for themselves for the good
Yep.
part. And if you have something in Toronto, Vancouver that's paying
Mm.
for itself, I say go for it, because it's a great opportunity just to have it, wait 5-10 years, and then you've got that equity to plug into the other market. So different strategies, but I'd say out in Vancouver, it's more of a not cash flow, but it's more, hey, can I get something that pays for itself? And it's just about waiting and buying at a great location that potentially has density, that people going to want to move there, SkyTrain coming in as well. These are all the different ideas that I'm looking at as an investor in Vancouver, is what's coming down the road, and how is this going to affect our property.
Well, let's unpack that a little bit more, because again, this is, you're giving us amazing nuggets here of information, because if the city is planning that massive size of development, values are going to go up. First of all, as we say, Vancouver is AAA location. So that's a place you put your money from, whether you're an investor or you're going to live there as well. It's not going to see fluctuations in the market, because just the demand has traditionally always been there. That's what AAA location is about.
Yes.
Now you're layering on further development. And if the city now is allowing merging of these properties, the mid-rises, to sort of merge, and then you get a footprint for tall towers, and these developers are coming in. I mean, that is an opportunity in itself, right? You could do some land assembly if you're into land assembly. Just look at what the plan is for the improvements and the corridor that's coming. Target some properties there that the builders have not grabbed yet. You can do some mini land assembly, get it ready for them, because again, builders love building. They don't love dealing with land assembly because it takes time. It's not their specialty. You come in there, you can do that. Then you basically flip the permits over to them, the deed over to them. Everything is ready to build. They'll pay a premium for it, right? Because their money is in putting the building together. So that's one.
Definitely.
As a smaller scale investor, maybe I just need to get a couple condos in my hands. Well, here's your opportunity: pre-sale condos, right?
Pre-sale condos,
Absolutely. If you're into multifamily, then you skirt around the area where the businesses are being developed, and then you buy, maybe it's a duplex, maybe it's a fiveplex, whatever opportunities are there. You buy it with the plan that the market is going to further develop, which, to your point, rents are going to go up, right? And again, as an investor, that's what you're buying on rents, because you need the cash flow on a multifamily in order to carry the mortgage and in order for it to be worth your while. But the beautiful thing is, because of the location, it's AAA, values are going to continue to be there. The risk factor is sort of somewhat lower when you look at how does a recession affect a small town or a little bit of a growing town. Maybe people stop going there, right? So there's a lot of give and take, but Toronto, Vancouver, these sort of places where it's premium location. As an investor, if you're looking to put some money and you want it to be safe and you're not going to be worried about it on a daily basis, that's your money. That's your money maker right there. If I'm sure if we can connect with you, if investors connect with you, you can show them the plan or the footprint of what the development is going to look like. And you can actually target what it is, because the investor who knows about investing, they'll come in the market early, because that's when you want to grab it. When people see the development and they see the new buildings and they really see where it is, the price has already gone up significantly, but that consumer person, they're ready to buy, they're ready to put their money down there now, right? So you have some good insights in terms of where the city plans to go, and you get in early. You absolutely get in early.
Definitely. Yeah, and it's great because like right now the premium for Vancouver is actually the closest to the valleys it's ever been. With people moving out to the valley, those prices went up so much. Vancouver actually went up, but not nearly at the same amount.
Wow.
So in a way, we're getting what I believe is happening now is a bit of a re-urbanization, people moving
Yes.
back out from the valley, moving back into the city with gas prices being so
Yes.
high. People are kind of going, oh wait, maybe
Absolutely.
I should save the money and move to the city because and offices reopening now. So you're getting a bit of a re-emergence of the urbanization concept, which Vancouver is they I think they call it 15-minute city because you can get anything within 15 minutes walking distance, and
Nice.
downtown Toronto as well.
Yeah.
So I think right now it's not really much of a premium. So like, why wouldn't you try to get something in downtown, maybe along Broadway? And with everyone coming back to the city and things reopening, it's a great way again to get something that, again, not a cash flow machine, but a break even in a great AAA location, which is a slam dunk. And you wait it out, and then from there you plug in your equity that you've made into, maybe it's Nanaimo, maybe it's Prince George, and you get a manager out there as well that can help you with that. And there's a lot of creative ways to from use the equity build in Vancouver, and that's what I generally would recommend. That's kind of what I'm doing myself too, is again, being in the sales in the Vancouver market. It's a great market for sales. The prices are generally higher. So, your commissions are going to be bigger out here than out in the smaller towns, and using this money to put it into, and put it in, improve these properties, make them a better place to live for people in smaller towns. And I think this is where you get a bit of that, again, spillover from Vancouver. And so I think it really is the heart and the beating soul of BC is right here. And I think it does offer some unique opportunities. And I think, again, pre-sale, it's the easiest way probably to start. If someone's like, I have no idea where to start,
Right.
pre-sale is probably the easiest way for a first-time buyer or first-time investor to do something out here. And it's picking a pre-sale in one of these strategic locations, and maybe not complete in the next year. I would probably recommend someone completing, further out, 5 years plus, just because real estate is going up with time. And pre-sale in Vancouver, like 9 times out of 10, you'll make money on it. And again, the 10% that you don't, it's probably a timing issue,
Right.
or maybe a location issue. You paid too much of a premium when you bought it 5 years ago.
Right.
But I think the next 6 months, I work in pre-sale and Rennie. We do a ton of pre-sale. It has been pretty slow the last month. Like, I can't say which building, but I was launching one out in the valley, and 264 homes, hoping to sell out 100 in the first, couple of weeks, as we had the momentum there. But people are excited, but they, end of the day, there's about 40 to 50 that end up selling in the first week, which is not a bad. And by no means am I saying this bad, because in the grand scheme of things, it's like this is actually what a normal market is. But it is kind of making developers think, oh, maybe I should be priced well, maybe I should be offering incentives now. Maybe these are things these are some things that we're going to start coming back, I think, in the next 6 months, as developers realize their projects aren't going to fly off the shelf, and they do need to make financing requirements. So that's why I think 6 months from now, we'll start seeing these great opportunities of pre-sale for stuff completing 5 years out. And this is going to be a great opening, I'd say, for the first-time investor to get in, or the first-time buyer to buy that property. Just because Vancouver is usually never really on sale, and it is right now, and it will continue to be. A lot of experts are predicting that in the next 5-6 months.
Absolutely. Well, Ryan, thank you so much. I mean, you've given us so much insights in terms of the BC market and the strategies and the certain locations and things like that. So I can't thank you enough for sharing that with our viewers here on the Pineapple Podcast. It's really, really been great. I will put your contact information in the comments for people who would like to reach out to you. So sort of any last words before we say a final goodbye?
No, and thank you for having on the podcast, Mitch. It's always great to connect with other investors and learn as well from yourself. And if anyone does want to contact me, yes, you can put my information at the end or in the description area, and then I'd be happy to chat with them.
Thank you. Well, once again, folks, this is Mitch Parmasar, your host with the Pineapple Podcast, wishing you great successes in your investment journey. Have a great day.